Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, October 23rd, 2017. I wanted to do a quick overview of some of the things I'm watching, mostly the broad markets as well as the sectors. I'll start out here with JCP. Since this one was put up on Friday as a potential short squeeze uh, trading op on the long side, we had on the daily chart here bullish falling wedge. Positive divergence, which is now confirmed. You can see that bullish crossover on the PPO, and it's moving up pretty decent today, about 2.5% so far. Nothing big, again, relative to the gain potential, from where it was posted the other day. We're looking at probably, quite likely a 20% pop at minimum if it hits that first target. But I did put up this for shorter term traders. I posted this on the front page as well, and we've moved up a little since the open. But you can see here, these are actual resistance levels. They're not adjusted. This is an unofficial trade. And on this 60-minute chart, I'm just showing you the resistance levels. So best to set, I always like to take profits a little bit before a potential price target. So if you're a quick trader, you just want to get in and out, game a little bounce in this stock and then get out. These are your near-term targets. Otherwise, the targets I listed on the daily chart on the front page, and I just showed you on that last chart we were looking at, that's a longer term swing target. But so far we pretty much effectively hit this target. We hit a high, I think 372 so far, and as I always say, best to, when you identify a resistance level where you want to take profits, best to book a little bit shy there, a few pennies. So here, for example, you might, set your sell limit order around 399, maybe 398, and then, a few cents below if you want to ride it up to that 415 resistance level. And then I think that daily swing target wasn't much farther. Yeah, it was about 424 right there, and that's pretty well defined. So again, that's where I expect the first significant reaction if and when we get there. But either way, looking good so far. Just watch it. It'd be nice to see volume start to expand from here as well. That's something else that'll help confirm this breakout. All right, next one up. Let's just look at the broad markets real quick. Not a whole lot to cover there. There's a daily chart of SPY. We've gone over this so much lately. There's just not a lot going on. Well, we did have this little false breakdown, had this minor price channel here. We had a what looked like a legitimate breakdown. It looked like the real deal, but then boom, the SPY just worked its way right back up. But interestingly enough, you can see this uptrend line or the top of this price channel. These two yellow lines are price channel. And so now we're close to challenging the top of that price channel. The divergences are still in place at this point. So we did have the little false breakdown. Markets pushed up, made a marginal new high. But again, the risk reward just doesn't look very attractive on the long side, nor do we have any sell signals right now with that 60-minute sell signal being negated so far. Next up, QQQ on the 60-minute chart, we had that same comparable, minor price channel right there. Gap down, again, it looked legit. Now, this one, the Qs really aren't looking as good as a SPY. Again, I don't want to split hairs here, and I really don't want to spend too much time on doing broad market analysis because a broad market is, we're talking the gains are so small lately. Good luck to you if you're profiting swing or even day trading this market. That's almost impossible when you don't have the wide daily ranges, swings, things like that. Oh, my apologies. I had to pause the video there for an interruption. Let's see where I was. 60-minute chart of QQQ. There it is. There was that gap down. We've come back, but we haven't even fully back tested that minor channel yet. And again, when I say minor, there's only a few reactions, not a tremendous significant level. There's not a lot right now that pops on the daily time frame, so we're just zooming in. I'm looking at these 60-minute charts to try to gauge the near-term direction. But so far, you can see we fell just shy of the previous highs right here, and we're starting to move lower. That Q's actually faded any gains they had pre-market. You can see a little gap there. So these are the levels. If you're trying to gauge the near-term direction of the market, you look for these gaps, gap there, and then obviously the next big move would be down below, or at least in the bearish case, down below that these two reaction lows. You can see both of these candles had a low right here around 147.26, and the bullish case, as always, is if you take out the new highs. If the Qs do that, just like the SPY, they will still have negative divergences in place. Again, these are just an extension of the same divergences that started back here. The market is working its way up gradually, but the negative divergences warn that we're likely going to get an impending trend change soon. That's all it says. So we don't have any solid sell signals yet on the Qs or SPY or really in the broad markets for that matter. Just want to share these levels. There's IWM. IWM is, we had this little wedge. We broke down. We've just grinded sideways in an incredibly tight range. It's, for weeks now, we're talking a range of less than 1%. Well, we did drop out of the bottom of that range right here, pop back up. So really what I'm watching on IWM, and again, we're in the world of the 60-minute charts here. You have this uptrend line, fairly well defined. One, two, three reactions at that point. Fourth reaction here, we broke down. We back tested, went a little bit above it, but have rolled back down below it. So that is, we're getting a little bit whippy here with the trend indicators. They were bearish when I had circled right here. They were bearish. We crossed back above the zero line with that PPO 9 EMA, but the PPO is now making a bearish, or poised to make a bearish crossover. It hasn't done it yet. So this may prove to be the whipsaw signal. This may be the sell signal on IWM. Only time will tell. And just watching these trend indicators. So bottom line, little bit unclear right now in the broad markets, although I still do favor move, ultimate resolution to the downside here in this pattern and SPY and QQQ. And again, it has a lot to do with the divergences, trend lines, everything else that I'm looking at. It's just seems to be taking a while to play out. Okay, now looking at gold, I like to really have been focusing on this chart recently, the euro US dollar pair, to try to determine where gold's going. And it's doing a good job of it. Gold is going to move, in line with this chart as far as direction, not tick for tick, point for point. But, when the euro USD pair is rising, that means the euro is rising against the dollar. The dollar's falling. When the dollar falls, um, or I should say, in this chart, when the euro falls against the dollar, means the dollar's rising. That's bullish for gold. So what we're watching here is we can see the uptrend. We broke down there, hit that first target, went up to my bounce target zone. Again, I've covered this many times recently, and it says, bounce target zone is a resistance zone. That's simply what that is. And so far, we failed there on two different occasions, but we've also held support at that first target zone, which is a support zone. I can tell you this from here, the trend indicator is still bearish. The PPO is rolling over. So I have to lean slightly towards, I'll stick with my preferred scenario, which is another thrust down to my final target zone. But I have to say, I'm not betting on it. I'm standing aside the gold trade, and I have been for a while, because longer term, I'm still bullish on gold. I'm still bullish on the euro, bearish on the US dollar, meaning I expect this at best. My expectation is a move down to that final target zone, somewhere about, and then a resumption of the uptrend in the euro against the dollar, meaning the euro will rally, the dollar will continue to fall, and that will be bullish for gold because when this chart goes up, the dollar's falling, and that's bullish for gold. So that's where we're at. But again, let's not put too much time into it because anything can happen. Now, at the end of the day, if you're in gold, gold could be a dead money trade. There are times where it trades sideways for a while. As with any trade, I like to step in when the charts are either clearly bullish or clearly bearish. There's some ambiguity here, and I've made that clear. I don't. Maybe we go down to that second target in the euro US dollar, maybe not. Gold as well. The charts just aren't clear. And if I had to pick one of the two, just looking at the technicals, trying to put my longer term bullish outlook aside, uh, I'd have to say the outlook is bearish in gold near term because you can see here the PPO is still below the zero line. And again, I'm talking about the 9 EMA, the signal line. Cross back here, we had a bearish crossover. It remains below. It looks like it's curling over and making a bearish cross where we're still below the zero line. So by this trend indicator, by this metric, the trend right now is bearish in gold. And I just don't see a reason. I don't see anything on the 60-minute charts that say step in here. We had a little divergent low right there, at least on the PPO, not in the RSI. It did play out for a little bit of a bounce, but again, I just don't see any compelling reason to be long nor short gold. So I'll leave it there. Obviously, my analysis on gold also plays into the minors because, as I often say, you just have to get the call right on gold, and you're going to have the call right on the minors because ultimately they'll follow. They'll follow ultimately on the upside or the downside. There may be a little bit of a lag here and there, but the minors, like I always say, are just simply a leveraged play on gold. Well, actually, it's funny. I was about to wrap up and move on to oil, but figured we'd look at gold futures real quick. And I just noticed here we do have a divergent low. I'd missed that before on the 60-minute time frame. So this is a 60-minute chart of gold futures. And you can see here that we have right now we've recently put in a divergent low here. You can see the MACD is starting to turn up. And, as we see here, we had a divergent high right here at this point. That was bearish. We had a divergent low right here. That was bullish, divergent high bearish. And so now a divergent low on the 60-minute chart of gold. So I didn't pick that up earlier on GLD. That's why I like to look at futures. They trade around the clock or nearly around the clock. Um, so that's that. And it just adds to the fact that, like I said, my analysis is somewhat ambiguous right now. I can't make a screaming, strong, solid case to go long. But I said earlier I wouldn't short it, especially now that I see negative divergence on this, or bullish divergence, I'm sorry, positive divergence on the 60-minute chart. So we may get a bounce here, and this has been a pretty significant level. That's at 1290, 290, so call it 1293. You can see a lot of reactions off that level in gold. So if we do get a bounce, watch that 1293-ish level. That could be significant. Okay, as long as we're on the futures, here's crude futures, CL, 60-minute chart also. And again, series of divergent lows, which are bullish, lead to a rally, divergent high, divergent low, divergent high, and then we had a breakdown there. So this looks like just a kickback rally so far. This is, since I pointed out this divergent high, a week or so ago, it's been playing out for a correction. Nothing major so far. We bounced off support. These are levels I had on the chart ahead of time, 50.78. You can see we hit it, went just a hair below it and bounced so far. Again, appears to me, based on just looking at this chart, the scope of the divergence and all that, I don't think this correction has run its course yet. But again, that's another trade I'm stepping aside. I just don't see at this point, I've remained bearish for the last few weeks on energy, primarily the energy stocks. And however, at this point, I just don't think the risk reward to being short or to adding a short position is worth it. So a trade I'd rather just stay away from and watch for the next really high probability entry. Just look at USO real quick for those of you like to trade the ETNs. This is USO. I'm looking at these lines here. This divergence, we had negative divergence right here. It's still negative divergence at this point. That divergence, if we make a new high, it will be extended. If USO, I prefer to use CL when trying to chart crude prices, but USO does a decent job, not a great job, but a decent job of tracking it as well. So that's what it looks like on the daily chart, and I'm still a little more bearish than I am bullish on it. There was a divergent high here on the 60-minute chart. That's what we're looking at. Broke down from this below this trend line, back tested, and it's a little kickback rally. So similar to what you're seeing in CL that we just looked at, the crude futures. Now let's just stay in the world of these 60-minute charts for now. XLE. Here's that wedge I've posted, the divergent high, the breakdown. We've moved down. We've now recently hit this. These were all potential pullback targets that I had. So we hit that 67.44 level. Um, and again, so far, this has proved to be a correction more in time than in price. We've been moving sideways since breaking down from that rising wedge. So we have moved lower, but not by a tremendous amount. Trend indicators are still bearish for now. We do have the PPO curling up here, making a bullish crossover, but as long as that 9 EMA is below the zero line, as well as this 1333 EMA histogram, the trend is bearish. Uh, really another trade I'd rather stand aside in for right now. There's XOP. We hit that first target zone, hit it again, finally cracked down below it. Thought that might open the door for a move down to T2, but so far that hasn't been the case because we regained that support. So you have to watch this level, and we need to see those lows from last week. It looked like Thursday's lows. Those need to get taken out. If they get taken out, we'll probably move down to this T2 level, which is 32.30. Trend indicators remain bearish for now, so that's keeping my outlook. If I had to pick one or the two, I'd rather be short. But again, I think there's better fish to fry elsewhere. XES has had a pretty hefty correction. That's the one that I really wasn't focusing on. I was covering the charts of XLE and XOP, but you can see XES, which is just another subsector of the energy sector. It's the equipment and services, and that's had a nice correction. However, it's down to support right now. There's support right here. This line I have at 1488, and it looks like we kissed that line. You can see a reaction right here, reaction right here, reactions back here. So there's one to watch if you want to go long or game a bounce. I just don't see, again, I don't see a compelling reason. If we're in a bearish trend, I'd prefer to see divergence at least on the 16-minute time frame, maybe the 15-minute. You might have that. I'm not going to bother with it in this video. Again, hard to say whether the correction's over, but as I mentioned recently, we have this potential inverse head and shoulder. So we could have a little more downside, and we'd have perfect symmetry on the shoulders. You don't have to have perfect symmetry. It's nice to see symmetry on a head and shoulders or inverse head and shoulders pattern. But so therefore, let's say we're at 15 now. We can move down to around the 1450 area, or we could reverse now. So bottom line, let's watch for that reversal, see if it happens. I just showed you support on the 60-minute chart. Here's the PPO coming and testing that zero line. If it curls up here, that would be bullish. And I do think we will, at least before, I don't think the signal line will cross. Remember, this is a trend indicator on the daily time frame, looking at the same EMA, the 9 EMA. So if we see that turn up, again, that's a scenario I highlighted, I think, last week in the on the front page. See the trend indicator remain bullish. See so at some point soon, again within the next 50 cents or so, a reversal here. Ideally, you want to see a formation, the right shoulder be finalized on increasing volume. That's one of the criteria for an inverse head and shoulders or regular head and shoulders pattern. And then, of course, maybe a little reaction there and then a breakout above the neckline. And it would be a pretty powerful projection. You take the distance between the head and the neckline and you add that to where the pattern breaks out at the neckline, and that's your measured target. So a lot of potential here if this forms. But again, this is in the early stages. We don't even have that right shoulder formed yet. Um, Sometimes I'll take a position down along when I see a head and shoulders topping pattern or an inverse head and shoulders bottoming pattern, such as this. I can take a position down there, especially once you've seen that at least the peak of that shoulder be put in, or the trough of the shoulder in this case, and then enter there. Add on once that's the pattern's fully formed and you get a breakout of the neckline, then you can add to that and take it to a full position. So again, something to monitor. Okay, we'll wrap with just two other sectors I've been watching. XBI, biotechs, I've been tracking those in recent weeks. Looking at this divergent high here, pretty powerful divergent high on the daily chart, and that's been playing out so far with consistent downtrend. Look at all these red candles. In fact, since going all the way back to almost the beginning of the month, October 6th, we've only had one green candle, one positive day in the biotech. So there's a lot of, pretty persistent selling pressure. We're not moving down very hard, but we are making a fairly consistent downtrend. Now, the 60-minute chart I focused on quite a bit. We had a sideways trading range back here, which defined this level here, which is a support zone, and we fell to that. And not surprisingly at all, that's where we found support. And we found support there since we hit it back on last Thursday, and we're bouncing, bouncing, bouncing on that level. So far, we don't see any type of impulsive reversal. That would have maybe been a bullish sign. Trend indicators are solidly bearish right now. And if you ask me, I think that level's going to go and we'll come on down. Again, when I look at the daily chart, I have this target out here. My first target on the daily chart is down there around 82.43 or so. And that would represent another maybe 3% or so downside in the biotechs. And there's certainly the potential for more when you look at these divergences, but we'll just have to take it. We'll take it one step at a time. And we'll wrap up with IYT. This is a transportation ETF. I did a video on that recently, along with the trucking stocks and railroads. Uh, Bottom line is we're clinging to this trend line here. We had an intraday breach, but we haven't closed yet below that trend line. So this is an uptrend line to watch. The fact that we do have divergence in place, a divergent high, leads me to believe this trend line will give way sooner than later and probably see a correction in the transportation stocks. 60-minute chart, we have this uptrend line here. This is just really a different draw, if you will, of that trend line we were just looking at on the daily. If you look at it this way, there's not a lot of reaction, so I'm not crazy about this trend line, but we have 1, 2, 3 reactions, and then we broke through it here. This is another trend line. Looks like it's catching prices so far. So here's a support level. Maybe we go on and back test that trend line, but we still have divergences in place. And you can see the PPO just starting to curl over here while these divergences remain intact. I should say we'd have to make a new high right here. We'd have to take out that previous reaction high there to have another divergent high. So I'm going to leave this right here for now and just say so far this appears to be a breakdown and a kickback rally, but not anything to get excited about. So right now I think just focus on individual trade ideas is a way to go. Like we started with that JCPenney, going up. There it is. This is that 60-minute chart. You can see now we actually hit the resistance level, went a hair above it, and have pulled back since. So that first target's already been hit. Um, and any other individual trade ideas that stand out, I'll share those. But just wanted to give my view on the broad markets. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.